no gold is not enough.
Hey guys, so in this video we're going to be talking about kicking patterns, and it's one of my favorite ones to trade, and it's really simple, so we're pretty much just going to go right into it, and hopefully you guys enjoy and can use it to make some money. So first things first, we need to know what a kicking pattern is. So I already have a video on it, but I'm remaking it because I feel like I can do it a little better, and we have an example from last week. So first things first, we want to see a big range candle. For a bearish kicking pattern, that candle should be green, and for a bullish kicking pattern, that candle should be red. And the reason being is because we know then that they were strongly biased. And when I say they, I mean whoever was trading in that stock the day prior. And one thing to note is with kicking patterns, we normally trade them on the daily chart. There's not very often many like weekly kicking patterns unless you have an earnings release on a Monday or something like that. So for demonstration purposes, this is a daily chart here. And again, we need to see that large range candle. We want to see, for a bearish kicking pattern, an open at the lows and a close near the highs. It doesn't have to be perfect. There can be a little wick on either end of it, but we want to see a big range candle. And then the next day, the day after, what we want to see is a gap that goes near the previous daily low to give us a strat trigger, or it can open right at it, or it can open below it. And the reason being is because if we know they were trading long yesterday, anyone that bought here or here or here is still in that position. And the reason being is because when you don't have a large upper wick on that, we know that they're more than likely going to be holding a great amount of that position that they bought the previous day. And if you do see something like this, where you get a large wick and maybe you have a wick on the downside too, obviously they were buying that day, but there's a lot of profit taking towards the close. So we really need to focus on seeing that big range candle. What we look for in the following day is a trade in the direction of the opposite of whatever this large range candle was. So for a bearish kicking pattern, we want to see a following day turn into a large red candle. And for a bullish kicking pattern, we want to see it turn into a big green candle. And when trading these, the same ideas with the strat apply. Your stop goes at, or you can go slightly above the open. When this triggers, you would short below that previous low, and you'd throw your stop somewhere slightly above. And I get a question sometimes on these. They're like, okay, well, how do you know if it's going to go or not? And all I tell you is if it doesn't stop you out. So when market opens and these things trigger, they should go instantly because we're trading against losing participants. So if we know they're losing here because the market gapped, they're obviously betting on higher. The market gapped, anyone that bought yesterday, they're going to have to close their positions below previous lows. And that's why it's called a kicking pattern, because you kick people out of positions. And normally following this, you will get continuations to the downside for the bearish kickers and vice versa for the bullish kickers, because they're going to just continue buying it, right? And with other strat ideas like magnitude and time frame continuity, it can get a little bit more confusing. But since we're day traders, we're just going to be focusing on these kicking patterns, 2-candle pattern. We're trading the second candle. So that is all a kicking pattern is. It's the same thing on the upside as it is on the downside. Losing positions when we gap above or right near those previous highs, and they should close their losing positions, right? And they're going to have to buy to close if they were short. So very simple, and it's only a 2-candlestick pattern. So now we're going to go into the one that we traded last week. So I believe this was Thursday. So yeah, Thursday we traded it. And one thing to note with kicking patterns is they're going to work better when you have a news catalyst, just because the news catalyst is going to bring more participants into the market. So more often than not, there will be a news catalyst, but that's something to check for. And this was a CPI catalyst. And what we'll see is the previous day, obviously they opened near the highs and it closed near the lows. So if we go and look at this on a lower time frame, we can see they shorted into the highs, they shorted here, and they just continued shorting and didn't close positions at the end of the day. Because if they closed, you would have seen moves like this back into the highs, or at least into the range. But they closed right near the lows. So we know that there's trapped participants. So when this candle gaps up above all of this price action here, just based on the strat, we know where we're targeting. We know we're targeting previous liquidity, so we'd be targeting these two areas. If you were trading ICT stuff, you could be using this volume imbalance here if you would like to target, and you could actually build high day there. But for the strat purposes, we're just targeting pivots, just to make it simple. And if you want to learn the pivots and the targeting with the kicking pattern, I would suggest watching all my other videos that have strat in the title. That's going to teach you more about that. We're not really going to talk about that today. We're going to talk more about entries and a previous trade we took on Thursday. So we had a kicking pattern on the indices. And the important thing to know about that is you don't have to trade the indexes. You can trade other things with the kicking pattern. And if I quickly go and pull it up for you guys, we can see my thoughts going into Thursday. So indexes all showing a bullish kicking pattern, and pretty much the whole market is, aside from that, which all the index is doing it, means the whole market's doing it. And we're going to be biasing upside heavily today, 390 psych as the first target, and you could play SPX calls around the open if you want to capture some of it, and etc., etc. Personally, I had my eyes on these 4 tickers, and we had PM, RIVN, which I actually didn't end up trading RIVN. This one was a swing trade, so I was just keeping an eye on it. And Beyond and AMD both had those nice kicking patterns for us. And we can see our kicking pattern outlined on the SPX chart, which SPX actually gapped to right here and then traded through all these highs. And what you'll see is we traded Beyond, so we didn't trade the index. And there's a reason for that. So what you're going to see is that we traded Beyond. We did not trade the index. And there's a reason for that, because we had a trigger on Beyond and we did not have a trigger on SPX, which doesn't mean we can't trade SPX or SPY, just means that Beyond's going to be easier to manage our risk. So if we go to Beyond, so what you can see is we opened right at those previous highs. We had a large range day previous, and we took out a pivot. So we know bottom of the broadening formation, and now we have earnings catalyst as well. And one thing to note with earnings is when you have a lot of IV and then the earnings don't really do anything, which we opened in the previous day's range. So the earnings really didn't do much. Although you can see it moved 7%. I believe Beyond had like 13% priced in or something. But when you open within that earnings implied move, everyone gets out of their positions, and then you normally get really big moves. So everyone was obviously short. You can see we traded above, and they all got out of their puts and bought to cover their shorts from yesterday or the previous day. So exactly what a kicking pattern is. And what we're going to see is if we go to a lower time frame now, you'll see what I mean when I say it just doesn't stop you out. That's how you know it's going to work. So we open right below that entry trigger, and the second we move above that within the first minute of the day, our stop loss is here, our entry is here, and our pivot targets are derived from the daily time frame. So let me quickly go back to that for you guys. You can see we have a daily pivot machine gun. And for those that are curious, a pivot machine gun is just 5 or more candles that do not make a new high compared to the previous candle. And you can see we had lower high, lower high, lower high, lower high, lower high, lower high. So we had actually 6. And all a pivot machine gun means is they've been selling this and they've had no reason to get out of it. Now we have a kicking pattern. They're going to want to close their positions. And as we go above those previous daily candle highs, we're going to close more people out of their shorts. So above this, people are going to have to close shorts. And above this, people are going to have to close shorts. And you can see, we go back to our minute time frame. Beyond trades through our trigger, moves into the pivot, and then a little bit of a consolidation, continues moving through the pivot, squeezing shorts. People get stopped out of their shorts up here. They had a little bit of a retest in here and then ran into new highs. And then that was it for the day. It pretty much just consolidated. And then the kicking pattern, it is a reversal and they tend to continue. So we can see it consolidates in here and then continues to go and take out all those pivots for us. We did not swing for the continuation play. We only traded the daily, well, not 0 DTEs, but I think it was 1 DTE because it was Thursday. So we only traded the weeklies. We did not swing them. At least I personally didn't. I believe a couple members may have. But that was our day trade. And as far as entries and exits go, you can see this is most of it. So took 40% off at 82 cents, which occurred right as we hit this first target here at around 1366. And then what we looked for was the next target. And after that, we filled another 20% off. And then we threw a stop market order above our entry price, because when something goes nearly 100%, you don't want to lose money on it. So you want to keep your stops tight, move them above your entry, and that'll let you keep your account value as you ride the position out. Then we hit our second pivot machine gun target. They spiked up to $1.24 on that. And I filled out another 20% of that position. And at this point, I only had 20% of the position left. Stopped out at 106 because we started pulling back in pretty heavily. And the reason we stopped out of it was because if we go to the hourly time frame, we moved up, and then this hour started coming in nice and red, and I just didn't want to be a part of it, because if they're buying this hour and the new hour opens and they start selling, then doesn't mean that it can't go up here, it just means they're not buying at that hour. And I normally trade the first couple hours of the day, so I don't really need much more than that. And we managed to scale out about most of the position over 80% gain, so it was a pretty nice little day trade. And there was a couple other ones. I know I mentioned AMD, and you'll see this. AMD had a large range candle, opened near the highs, closed at the lows almost. Then this day gaps above, triggers up into these pivots here as the first take profit. And then you had a gap fill target here. And then you had your next area of liquidity, which ran the second day. And if we just go to AMD, I did not actually end up trading this one, but if we go here, you're going to see we opened and we had a hammer candle that would have been a potential entry with a stop at the lows here or at low a day. That one would have stopped out. And then my rule is normally if I get stopped out twice, the position or the setup no longer matters to me, just because mentally it's very hard to go sit through and stop out like 5 times in a row and then come back the next day and do it again, right? So if I stop out twice on a single ticker, I normally just stop looking at it for the day. But in this case, you can see we had a second entry on the fiver to the upside, and that entry did not get touched, and you didn't have a 2-down fiver until right here. And then we reached up for liquidity. So that was just a simple walkthrough on kicking patterns. Hopefully it was helpful for you guys, and if it was, feel free to like, subscribe if you're not, and if you have any videos that you would like to see made by me, feel free to comment below, and I will try and make those as quick as possible for you guys. So hopefully you guys have a nice rest of your week, and I'll see you guys in the next video.